FX Nation, what's up guys? Welcome back to ForexU and welcome back to our advanced course. And guys, in this video we're going to go ahead and we're going to talk about market maker trapping volume. Alright, so we're going to break this down here for you and we're going to try to make it as simple as possible, give you some examples how market makers basically trap volume. Alright, and they do it in a very specific way, and it's very simple how they do it. Actually, it's not very complicated or anything like that, so it should be very simple for you guys to understand, but it's important for you guys to see it on a live chart, that way you know what you're looking for. Alright, so let's go ahead and dive deep into this trapping volume. So when we talk about trapping volume, guys, when we talk about this, we're talking about, like, let's say a peak formation high or a peak formation low. Now, when there's market makers want to trap volume, there's going to be several spikes that may appear, which are all apparently contained within a trend line. All right. Now, you may want to ask yourself, like, okay, so what's actually happening here? So the market maker is trapping volume, and it's very important to notice that each spike that follows the first basically is not lower or is not higher than the previous one, so that basically any new trades, any new traders that come into the market and take the direction of the spike don't have any opportunity to become profitable, right? And then essentially they become trapped. All right, so let's take a look and see how this actually looks. All right, so when we look at this here, you can see essentially that we're coming down. Okay, we're coming down from a off of a trending move, and then we hit peak formation low here. Now here's what happens. All right, market makers go up, they come back down and spike it again, and every time that they spike, they basically get a new round of retail traders to sell. Right now, notice how they don't come all the way to the bottom here, because if they don't, then of course, guess what? These traders will basically be released, and they can actually get out of the trades and profit. So again, this thing comes back up again. Market makers will come back, keep rising, and then boom, spike it again. And again, it's the same thing. It's contained basically within a trend line here. Okay. So remember that the most important thing or feature about this is that each of the spikes is higher than the previous one, which prevents short position holders from taking any profit and potentially encouraging new shorts every time that they do this. So every time that they come up and they go down, it encourages new traders to go short. But of course, you can see that essentially every time that they do that, they just trap more traders until they take off. This is basically them collecting contracts, okay? But they do it in a way where it makes more traders get in. So instead of spiking all the way down and making, let's say, a W, right? They're just basically moving up slowly, trapping volume until they have basically enough traders trapped, and then boom, they make the spike. So how does this look like essentially on an actual chart? Okay, so let's take a look, and we'll take a look at an example here so you can look and see what it looks like. So this is AUDNZD, and you can see basically that we have market makers moving up. Here's the peak formation high here, and then you can see the next spike is lower, comes down lower, comes down lower, and then finally when they have enough, guys, boom, they come straight down and they drop it. Okay, so this is exactly what it looks like on a chart. There's going to be different variations of this, but essentially that's what you're looking for. It's basically a spike that makes peak formation high or peak formation low, and then as they move away, they don't make like an M or W or anything like that. They just basically start creating, let's say in this particular case, they start creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and basically they start creating a little trend here, and then basically boom, they just take it away. Okay, So all the traders, all the volume here is trapped because everybody's basically trying to go higher, trying to go higher, and they just basically get trapped and then they drop. Here's another example. As we can see, we're coming off of a downtrend here. Here's peak formation low, and then we go up, come back down, go up, come back down again, and then boom, we take off. You can see that every single time. This one's a little bit different, where they the second time around they don't come low, but the third time they do come low, but you still get the same effect. Okay, still get the same effect. It still has the exact same thing. Okay, so it's important to know and see how this actually looks on a chart, because I'm telling you, once you notice it, you'll literally know what they're doing and you'll know what the behaviors are. And that's really all that matters, guys. When it comes down to this stuff, when it comes down to trading, right, to trading this strategy, all it really comes down to is understanding the behavior that the market makers are doing. If you can understand the behaviors that market makers do, so moves like this, and you understand what it is that they are doing, guys, you don't need boxes and stuff like that to trade, guys. If you see this stuff happening, you know what's happening, you know what they're doing. It doesn't take a rocket scientist to see what's going on, right? But you have to understand what the reasoning is of why they're doing this. All they're doing is they're trapping traders and trapping volume. That's it. So now let's talk about the wedge trap. What the heck is a wedge trap? So in a similar way to the mechanism of trapping volume that we just looked at, a wedge or a pennant pattern works in much the same way, except that it is trapping volume in both directions. So instead of trapping volume in one direction like we just saw, the wedge trap is basically doing the same thing, but it's trapping traders on both sides. It's really, really ridiculous how they do this. So let's take a look at an example of what this looks like. So have you guys ever seen this pattern before? This wedge or pennant that traders always talk about? What is actually happening here in this wedge or pennant, right? These traders that are going long get trapped. These traders that are going short get trapped. Okay. Now, depending on how many traders they have trapped short or how many traders they have trapped long, depends on whether they go up or whether they go down. Okay. So in this example, if they have more traders that are trapped going short than they do going long, then guess what? They're going to go ahead and break out to go long. Okay? So let me repeat that again. Whatever side they have more traders trapped on, whatever side they have more contracts of, okay, so if they have more traders trapped short in this example, then they're going to go long. Okay? So that's what creates this wedge trap. All they're doing is just basically trapping both sides. And of course, you know that it has to break at some point as it gets closer to the end here. So you know it has to break. It's just a question of how much volume do they have, going short or going long. A good tool to use on this type of wedge pattern or pennant pattern is if you look at the market sentiment. Let's say if you go to like IG, to let's say DailyFX, and you take a look at their market sentiment that's provided to them by IG, which is a broker. And you look at it, let's say in this example, AUD NZD, how many people are going short? How many people are going long? If you got more shorts than long, guess what's happening? It's going to break out long. Okay? So that's a really good tool to use to basically help you understand essentially what direction they would be going in. Now, I want you guys to notice that the lower boundary of the wedge basically the peaks become slightly higher, just like they do previously when they're trapping volume. And the same thing at the very top, right? It gets shorter and shorter and shorter and shorter each way. So that's what builds the wedge, is because they're basically trapping on both sides. One thing that is something that you need to understand is on these wedges and pennants, it's really hard to predicting a direction in which the breakout will happen ultimately. And the reason is because, again, you don't know how many traders are trapped, either long or short. The best thing that I could suggest to you is to take a look at the market sentiment of a broker like IG or OANDA or something like that, because that at least gives you some kind of clue as to how many traders they have trapped short or long. So how does this look like on an actual chart? Let's take a look. All right, so here's one example here. You can basically see traders trapped long, traders trapped short, both directions, as it continues to build the wedge, and then it finally breaks. Okay, in this case here, they have more traders trapped long than they do short, and then of course they drop the price. Now I can tell you that this particular wedge basically was in an uptrend, and then it started to go sideways. Okay, so a couple things to consider in this particular example is essentially what you could have is you could have a peak formation high here, and then price could be dropping. Okay, in this particular example, because I know that the price itself was coming up from an uptrend and then started to move sideways. So you can see that they start to create that iceberg effect that I talked about before they just completely drop. Okay, and there's nothing here but open space. All right, so that's just one example of it. And like, again, they're just all it is, guys, is just a wedge trap. Okay, it's just a wedge or pennant. That's literally all that it is. All right, so don't complicate it. Keep it just what it is. It's very simple. It's a pennant or a wedge trap. Okay, but I want you to just understand what the behaviors are of these type of patterns when you see them. Okay, when you can draw trend lines on them and draw a wedge or pennant, you know exactly what's happening. You know that they're basically just trapping. That's all they're doing, is trapping both ways. Instead of just trapping on one direction, they're trapping them in both ways. That's all they're doing, guys. All right, so guys, I hope that this video here going into trap volume and showing you some different examples of wedge and pennant patterns allow you to understand the behaviors of what market makers are doing. Okay, again, the trading, the strategy itself, guys, is really simple, as long as you just understand what market makers behaviors are. And it's very important, like I always tell you guys, stop thinking like a retail trader and start thinking like a market maker. All right, when you're looking at the markets, when you're analyzing the charts, guys, look at the charts like if you were a market maker. If you had these, $3-4 trillion in the market, how would you get retail traders? What would you do if you were a market maker? All right, guys, thank you so much, and see you in the next video.